Hey, what's up guys? Zach Williamson here, back with another video, and I'm here with my buddies Ethan and Noah from Cross Country Mortgage. And yes, it is finally time for another market update. Last month we kind of missed it because I was in Cancun for a little bit, and then Ethan.
Yeah, second child, guys. So my apologies. I am balancing both of the small children at home. So,
Yes,
but we're back this month.
Yes, we had some crying babies at home, of course, but no, we're back for another housing market update for you guys. So the current housing market is getting a little crazy and in some really complicated, interesting ways. And we're going to talk about specifically numbers in Dauphin County today. But the first one I want to go over is that units sold in Dauphin County is the lowest it's been in 2 years for consecutive months. So if you look at the chart here, and I'll put this up on the screen for you guys. So we were at 279 in December, 292 in November, and we went down the whole way 100 less units to 189 and 182 here in February. And these are numbers in Dauphin County specifically, but I think it's really interesting, right guys? I mean, like we're dealing with multiple months now of basically what feels like almost like a little bit of a standstill. Mm-hmm. Is that kind of the vibe that you guys are getting?
Yeah, and you know, we're coming off the winter market, but this is over a 2-year period. So we're comparing it to winter markets before as well. So it's not necessarily because it's a winter market. This is year-over-year data. But yeah, it's interesting. Inventory is still an issue. Noah, what do you think about it being a housing bubble with inventory being so low?
Yeah, so there's definitely some huge differences in what we would consider a housing bubble to what's actually happening right now. Again, if you're gonna reference the data and look at the hard numbers, there's just not a lot of inventory out there. There's not something that's supporting a housing bubble, and that's why with some of the stuff that Zach's gonna talk to you guys about, you're seeing house prices still rising. You're seeing not a lot of transactions going on comparatively. So it all kind of flows back into that inventory.
Yeah, so to put it in perspective, guys, in February of 21, there was 244 units sold. In February 22, I think I'm on the right one, we were at 248, and now we're down the whole way, about 50 units year over year from previous Februarys. That's a lot of units, guys. We're talking a lot of houses that are not getting sold right now. And so the next number is the listing median price has increased for the last 3 months. So for instance, we were at 199,900. That was the median price in Dauphin County. Then 219,950, and now 229,900. So as units are kind of slowing down, as we're not seeing as many sales, we're starting to see housing prices kind of push back up again.
Mm-hmm. Mm-hmm. Yeah, and there could be some of that data is the median number, right? Mm-hmm. So if there's 4 $1.5 million homes that are listed, that's going to probably push it up a little bit.
Yep.
So that could be some of the, but we're still seeing appreciation. And I think that's the point. Appreciation has slowed. It's not the COVID time appreciation that we saw at 20% over the year, or very close to it. That's probably not the exact number, but the point is we're still seeing homes rise in value and rise in price.
Right.
Absolutely. I mean, that appreciation number, even though it hasn't been as high as recent years, is still something that's still definitely important to take in mind when you're considering buying a home. It's still something that is huge for you as a homeowner, as a benefit.
Right, because a lot of the fear and a lot of the reason why people are sitting on the sidelines and maybe not jumping into the market is they're like, well, you know, if I buy this house and then 3 years we're just going through like the worst hellstorm of depreciation in U.S. history, what's going to happen to me? And I think a lot of people don't realize that we're actually at like a really weird squeeze. Yeah. Right? We're actually at a different point in the market than people really think.
Yeah, and to that point, there's and you can go out and research this, but there are a lot of statistics around the influx of buyers that are going to be coming to the market, and not just now. That's years down the road from now. Just the generation, there's more people in the generation that's coming to be buying. And so that's going to mean there's more demand for homes. And at the same time, builders have slowed. So they haven't built as many homes. And it's I forget the statistic that we heard the other day, but it is a large statistic on the gap in homes that are available for people to buy versus the people that are demanding those homes, which again, just speaks towards the fact that we don't feel like it's a housing bubble.
Right. Absolutely. Yeah, I think, and a couple more numbers to go through. So listed units is the lowest it's been in January and February in 2 years. So we're not only seeing the lowest amount of sales, but also units listed are the lowest they've been in 2 years within this point in the year. And then average day, this is the weird one, okay? So average days on market is the highest it's been in 2 years. So you would think as things get more competitive, houses will be sitting for a lower days on market. That's kind of the intuitive, economics part of your brain, right? Being like, well, if homes are so competitive, why are they sitting so long, right? So for instance, days on market in February of 21 were 26, then in February 22 they were 24, and now we're at 30. And we've seen a really huge spike. We've seen 24 days, then 34 days, and now 30 days on market is the average days on market in Dauphin County. So what do you guys think about days on market rising as things are seemingly more competitive?
Yeah, I'll take that. It's weird.
Yeah,
it is weird. It doesn't make a lot of sense. Like if you try and really get down to it, it feels like there's a little bit more of a delay in making a decision, or maybe a delay in making an offer. Yeah. Some of those homes that are sitting are probably potentially overpriced. Like they're probably not at the right price point. That might be why they're sitting. But I do think that buyers are taking their time a little bit more now and maybe settling into the new rates that we're seeing that aren't the rates from a couple of years ago, which we will hit upon. But yeah, what do you think, Noah?
Yeah, so you guys got to consider everything is so fluid when we're talking about the real estate market and everything that we do. So I think it's a little bit of a combination of both, right? We're seeing some homes out there now that are maybe not priced correctly, but also with that, and it's getting compounded, is we're having a lot of day-to-day conversations, like boots on the ground, with people who are just making smarter decisions and taking a little bit longer with that. They do want to see a few homes maybe before putting an offer in. We were so accustomed to this fast and furious world that we were in for a year or 2 years, 2.5 years, that now we're just in a different situation. And again, it's all fluid. So if your reference point is some of that fast and furious market, we're far removed from that now.
Yeah. I think my conspiracy theory, okay, I don't have data to support this exact theory, okay, but this is my theory. I think that we're having just a lot of smarter buyers who are saying, I'm not going for that desperation play. I'm not putting that crazy offer out there unless it's the one. You know what I mean? So people are either letting a home sit, and sellers are like, why is my home not selling for $50K over asking price or whatever? And so there's a lot. I feel like we've kind of built up an inventory of homes that are overpriced with sellers who maybe don't want to cut those prices down more. And then the only buyers we have are a little bit more intelligent. They've lived in this market for 2 or 3 years now, where they've seen the crazy desperation competition. And so buyers are getting a little bit smarter. They're letting homes go that they don't necessarily want, that are definitely overpriced, and only really putting those desperation offers on the one. And a lot of people feel that the quality inventory that comes on the market is the one for like a lot of people. And so you'll see 20 offers on one house and then another house go up and get no offers. And it's really interesting to see how the days on market is kind of rising as an average because of that. And that's just kind of my theory on how things are going right now.
Well, and you just mentioned quality. I think maybe that's part of it. There is really not, at least what we're seeing in my opinion. I'm browsing every single day to see if there's anything out there for the buyers that we have pre-approved. There is not a lot of quality out there, and that's potentially why we're seeing longer days on market and folks letting some of those lower quality listings go a bit, and it's interesting.
And guys, you gotta think too, there's a large portion of the market right now that is holding on to a house with a low interest rate. So they're not as motivated to list their house, even if it is something they could make some money on, or they found their forever home in a rate that is lower because they took advantage of those at a different time.
Yeah. And the thing is, like, even if you didn't buy during the pandemic, a lot of people refied. A lot of people changed their interest rate anyway. So most, I won't say most homeowners, but a lot of homeowners out there are sitting there with 3% interest rates going, why would I buy anything at 6.5 if I'm fine where I am? So that's definitely playing a role too. So in my opinion, this is kind of where I sit with this, guys, is that I think we're hitting a kind of a weird stalemate, okay, due to high interest rates for buyers and really, really low inventory. It almost seems like we have almost a squeeze on the neck of the market, if you want to think about it like that. And of course, I mentioned high interest rates. So how are interest rates moving, and how do you see this kind of playing out right now at this stalemate?
Yeah, so we missed February, right? Okay.
We did.
So like precursor there, because they were getting better.
They were.
And in February, actually, pretty much just in February, they've gone up from where we felt like they were getting better. They've gone up 0.75% on average, right? They did improve. Okay, we had some good momentum. There was a very interesting jobs report that came out that just let's just say it doesn't seem quite right. But who am I to say, right? So that came out.
And does the jobs report, just so people know, does the jobs report heavily influence interest rates?
Yeah, the jobs report says, wow, there's a lot of people with jobs they can afford to pay for a mortgage, right? And so what the interest rates are driven off of is the bond market. Bond market didn't like it. Interest rates went up, right? And then on top of that, inflation number came in, 2 weeks later, something like that. That wasn't what we wanted to see. It wasn't terrible, but it just wasn't a step in the right direction. So we're still at where we're at. They are not at their peaks where they were, but they're not as low as we would like to see them now. You know, I think, you know, to the question about where they're going, I'll let Noah kind of hit on that a little bit and what we think on the lender side. But they have, after taking a step forward, we've taken 2 steps back.
Yeah, I think this is a really good point to drive home there. We definitely take 2 steps back recently here. But the overall theme, the overall sentiment is still that we're moving down. We're still moving in the correct direction. Some of the actions that have been taken in the overall macroeconomic sphere, we definitely still feel is moving in the right direction. It's just been a little bit of a hold up or a pause on the timing of things. So, you know, overall sentiment, I think, you know, just to drive the point home, is still that they are to move lower. Everything is pointing that way. We're waiting for this last shoe to drop on some of these jobs numbers that seem to have missed the mark a little bit and kind of stilting things up right now. So,
and inflation's this can't last forever. Like it cannot be this hot forever, right? And the feds are taking measures and helping. And as that cools, you'll see rates go down. We are still getting reports from economic experts and people that have been in the industry longer than all 3 of us combined, that by the end of the year, it is very possible to be in the 5s. We are still getting those reports. So if you're buying now,
please.
Yeah, seriously. If you're buying now, we can refi you later for sure. If you aren't ready to buy now, then we can look at the potential 5% rates in the future as well.
All right, guys, we've talked a lot about the stats. We've talked a lot about how interest rates are moving and what our theories are on things right now. But what's kind of your overall opinion on the state of the market here in March 2023? And more importantly, how should we be giving advice to potential buyers who are looking to buy a house this year?
We have lack of inventory. That's sort of the overarching point here. We're coming to spring market, right? So we are hoping to see more inventory. That's very typically, historically, what happens when spring comes about is there is more inventory. So we are hoping to see that. I always say it, and I think we share the same sentiment, all of us, is buy when you're ready to buy. I mean, it's just when you're in the market, and honestly, when rates are a little bit higher, you might be more competitive. There might be less people off. As these rates get lower, you're gonna see more people enter the market. You're just it is what it is. It's gonna become more affordable. So if you can get in a home that you like now, potentially look at a refinance program, which we're actually running currently to refi later, then you know you're gonna be in an okay position. You have the chance to improve your interest rate, right? You always have that, but if rates don't get better, which we hope they do, again, we say this a lot, you bought at the right time for you at that point in time.
Right.
Yeah, absolutely. I think really the most important thing there, Ethan hit the nail on the head, is finding the right house. That's where the expertise of Zach is going to come in. Finding the right house is super important. We're having conversations every day. There's always creative options for us on the finance side. You got to remember that interest rate is something we can always change. The overall market we can't change, but there's always creative options, whether that is a seller temporary buy down to save on your rate, whether that is taking advantage of a refi later product that we can help you with. That's conversations we're having. So if you're sitting there behind the camera right now and you're thinking, hey, I really wanted to buy a house, but these interest rates are stopping me. Well, we could, play devil's advocate there and talk about reasons why it really would be a good time to buy. And anytime you can get in with less competition, I always think that's a plus in my opinion.
Sure. So yeah, 100%. I mean, would you rather compete against 100 people or 2?
Right.
And that's obviously a really big spectrum, but that's the point. Like,
yeah.
More competition or less?
Less
competition is going to give you a better opportunity to buy at a discount, or maybe not overpay, or whatever the case might be.
Or get inspections, or get any of those things that you're really concerned with. Yeah.
For sure. So I think buying with less competition is always the answer, and having the ability to pivot and adjust later is just kind of cherries on top.
And here's one last thing I'll add to that too, guys, is a lot of people always go back and say, oh, well, I wish I would have bought in 2018 or 2019 before things had appreciated that much. But do you think it's possible that you're going to be looking back in 2025 saying, I wish I bought in 2023 when things were better, when homes didn't appreciate to 400,000 that used to be 250? Are you going to look back and say the same thing? Like, how long are we going to sit on the sidelines and look back and be like, oh, I wish I bought that, and I wish I would have, I wish I would have got when the getting was good, right? I mean, we can play this game forever, and homes are going to continue to appreciate because they always do historically, and things are always going to fluctuate. And maybe there's better interest rates in the future, and you just refinance that. That's what a lot of people typically do. And then the last point, guys, we already talked about it a little bit, but where do you see the market heading as far as appreciation and then interest rates are concerned with the future? Do you think things will be better in the summer? Do you think things will be better by the end of the year? We talked about it a little bit.
Mm-hmm. Yeah, well, with appreciation, we do see it going up. We, again, not where it has been the past couple of years. Like, we're talking single digit stuff, not double.
Right.
When there's demand, which there is, that's going to drive up the prices of homes, right? Like, at least quality homes. So obviously that's gonna impact appreciation. In terms of rates, again, we see them dropping. They're a little bit delayed in what we wanted to see and some of the progress we wanted to see, but it's coming. Like, it has to. It's just cyclical, and that's how real estate works. Like, it is coming. And as interest rates drop, that's going to make affordability higher for folks. So if more folks can pay more, you're probably going to see appreciation stay up because more folks can pay more for a larger house or a house that's of quality. So a lot of signs are pointing towards continued appreciation, and again, the drop in interest rates. Just stay tuned for how that is going to happen month over month. But again, we feel like it's going to happen.
Yeah, absolutely. And keep in mind, guys, pair that stuff that Ethan just said with the competition factor that we've kind of been harping on here. Yeah. If things get more affordable, more people are coming into the market, more houses are coming into the market in the spring and summer market, it's just going to be more competitive by nature. It's a simple equation there. So it just kind of goes back to our point before that we've been making of you got to buy when it's right for you. And with rates, affordability, all of that improving, we're also going to see the competition rising too.
Yeah,
balance everything out.
Think of this statistic, and we just heard this the other day.
Yes.
For every percentage point that interest rates drop, that brings 5 million more people to the market.
Yeah.
5 million. Now, what does that look like in Dauphin County? I don't know that answer. But
less than 5 million.
Less than 5 million. A little bit less than 5 million. But think about it. I guess that's 10. If we get from, we're in the low 7s, high 6s, right? If we get to the low 4s, high 5, or low 4s, mid 5s, which is very, very possible in the very near future, that's 10 million more people coming to market to buy a home. So, do you want to compete with 10 million more people on a larger scale, or do you want to potentially get into something at this point in time?
Right. All right, guys. Well, I hope you enjoyed this March market update. Again, sorry we didn't do one in February. Obviously, me and Ethan were pretty busy. But if you enjoyed this video, please leave me a like. It helps me out a lot. If you're on Facebook, like on there too. Comment if you have any questions for us to answer in the near future in our next video in April. But yeah, guys, anything else?
No, I mean, we're open to feedback. We love to answer questions. These are our opinions, our views. We do have statistical data to back up a lot of what we're saying, but we don't have a crystal ball either.
Yes,
so
exactly.
We can't necessarily, we're telling you what is current as of March right now, what we're hearing, what we're seeing. So what may happen in April, we don't know.
We'll find
but
out.
that's why we'll be back to give you an update. So.
Yeah.
Absolutely. That's our MO, guys, just giving you as much education as possible. And we're trying to base that in the facts that we see on a day-to-day basis. I want to thank these guys for allowing me to join today. So
Oh, yeah,
thank you guys.
absolutely.
Yeah, thanks, Noah.
Yeah, first time on my YouTube channel for Noah, so that's awesome.
Absolutely. Thank you.
So, all right, guys, we'll see you.
Thanks.